Hey traders, welcome back. Today's Friday, September 20th, 2024, and I'm back with another trade setup, specifically a fair value gap trade that I want to talk about. And I want to take a few minutes to go over that particular trade, let you know what I saw and why I took the trade. So let's kick it off. So I want to first start off by going back to StockTwits. I had two trade ideas that I had put into the on the platform. Today was a little bit of a tricky day. You know, as a fair value gap trader, I specifically want to see price move into fair value gaps, but have some space. I don't want to have any sort of, opposing fair value gap or another key level close to the area where I'm looking to take a trade in a fair value gap. So in other words, if there's a bullish fair value gap, I don't want to see a key level right above, such as like a previous day high, previous day low, another fair value gap, because I don't want to, long into supply or long into any level of resistance. And the same applies to like a bearish fair value gap. If price is moving into a bearish fair value gap, I don't want to, take a short into a previous day high, previous day low, or bullish fair value gap. That messes with your risk to reward. And those aren't the type of trades. I don't want to long into supply. I don't want to short into a demand or a support level. And that's kind of what we saw today. And it was a little bit of a tricky day, and when you look, it's interesting because when you look back in hindsight, you see a massive push off of a level. You can always go back and say like, oh, I should have long that, that move, or I should have shorted that move. But the problem was there was something in between. There was something there that prevented you from taking that. If it were that clear, trading would be very easy. So when you remove all of the mitigated fair value gaps and you see what the market did for the day, it's easy to say that, oh, I should have caught in that move, but there's levels in between that prevent you from taking that. And as a very calculated trader, I have to make very good decisions on the trades that I take because I don't want to, you know, take trades where there's other levels that can cause my trade to go in the opposite direction and go against me. Okay. And that's kind of what we saw today until we were at a point where price went into a bearish fair value gap. And I liked what I saw. I didn't love what I saw, but I liked it. And we're gonna get into it, and I'll show you exactly what the trade I took. So there were two trade ideas that I had in mind. One of them was there's a bullish fair value gap in NQ, and I was looking for price to move into NQ and go long. The other one was a bearish fair value gap on the 15-minute chart on SPY and ES, and I was looking for price to slowly move into that level on decreasing volume and then look for a rejection candle. Now, price was on there was a downward move today, and that big downward move creates opportunities. So I always mention when the market makes a big move to the upside or to the downside, that'll create an opportunity. And it's your job as a trader to be patient and wait for price to move into that level and look for a potential trade. So on the move down this morning, it created a 15-minute fair value gap, and that was one of the trade ideas I put in StockTwits, was to wait for price to go back into this bearish fair value gap on SPY and ES and look for a trade. Now there was a long trade that was off of NQ. I didn't take that, but I was waiting for price to come back into this bearish fair value gap, and I wanted to take that trade. So let's go to the chart. Now I'm going to go back in time to just prior to where I had taken the trade. So as you can see here on SPY and ES, we can see the 15-minute bearish fair value gap. Now what I'm specifically looking for is, a decrease in volume. Again, as price is moving up into a bearish fair value gap, we want to see like decreasing value. We want to see a lack of interest in market participation. We don't want to see an increase in volume. That could imply that that trade wouldn't work out. As price moves up and we see an increase in volume, that suggests that there's an increase in buying as price continues to move up. And if we have a trade idea of taking a short, then we have to be very cautious in taking that trade, and we have to make sure we see the correct price action once price gets into that level. But that's not really what we want to see. We want to see a slow pullback into that level and then look for the rejection. So I'm going to go ahead and kick this off. So I reverse it a bit. We can see that there's the 15-minute fair value gap here on SPY, here on ES, and we're going to walk through this trade. So as price starts to move up, I'm analyzing the volume, and I'm paying attention to the candles, and I'm paying attention to the volume, right? Now, it's true that sometimes you may see an increase in volume, but you have to kind of pay attention to the candle size, and you have to do some logical thinking in comparison to previous candles. So now, what's really important to me, I'm not really so concerned about QQQ and NQ because those aren't the tickers that have the bearish fair value gap. I'm trading QQQ because that's all I take. I need to see the same price action that I see on SPY in order to take a QQQ position, but I'm more concerned about paying attention to the volume on ES and SPY as it moves into this bearish fair value gap, because those are the two that have the key level. So as price moves into this bearish fair value gap, now we've entered this zone. And if we look at where price kind of made its move, now one thing I will say is this: before I even go any further into the actual trade, there was a significant push from that move up, right? And that was noted, right? I was very aware of the fact that if you look at this candle, I had to close my down on my other machine. If you look at the candle on this previous, here on this candle here, there was a lot of buying pressure. You can see there's a lot of volume on that. Now there's a wick on the top and the bottom, so that could be, some buying and selling pressure. There, I just shut it down officially. Sorry about that. And so I was aware that there could be some buying pressure on this move up. So I have to be very cautious of any sort of short that I take. Okay, now I'm looking at the 15-minute. If I even go to the 5-minute, I can see that's the type of pin bar that I want to see off of a key level. Like that's the type of pin bar, and that's the type of volume that I want to see off a bullish fair value gap. So if I'm looking for price to come into a bullish fair value gap on decreasing volume or low volume, then that's the type of pin bar I want to take. Now, did I take that long position? No, I did not. It's not a fair value gap, so I didn't take that long trade. Would it have worked out? Yeah, but the problem is that I'm longing into a previous day low, and that's not a particular that's not a level that I'm interested in taking a long position into. So, but all we're noting here, we're gathering information from the market. So all I know is that on the 5-minute and on the 15-minute, we see a pin bar with high volume. That suggests that there's buyers in that area, and we could see strength to the upside. So if I plan on taking a short, which I am, I have to be very cautious of taking that trade, and I have to make sure that I confirm my decreasing volume going into that level. I have to make sure that I see a high volume reject at that level as well, because if I'm anxious and I don't get the price action that I'm looking for, I get in early, that's where you can get yourself into trouble. So in my head, I have that there's buying pressure down here, and we can, from that candle onward, I saw continuous move up. Okay, so and I'm aware of that. Now, as I look at the volume going into that level, right, I'm just starting to see a decrease in volume. So if I look like at ES, right, this is the highest volume from the move aside from this candle here. And I'm going to let me draw some arrows so we can, you know, exactly what I'm referring to. So this candle here had the highest volume. And then this candle here, this long candle, had the second most volume out of all the candles on the move up. So we saw like an increase in volume, and after that we saw a little bit of a pullback, and then volume started to simply taper off going into that level. I just draw a trend line just to kind of show that volume is decreasing as it moves into that bearish fair value gap, and that's what I want to see. Now, do I see that on SPY? Well, it's not the easiest to read, even if I look at different time frames, right? If I look at the 3-minute, you know, it's high volume here, higher volume here, increasing volume, and then a little bit of a decrease in volume. So it's not so clear, okay? And that's where you have to kind of analyze each candlestick and look at, okay, this one has a large body and has this much volume. But now as we get into this level, right, look at what we see. We see this candle here presented this much volume, but you know, there's little price movement. That's where like the VSA comes into it, right? So there's got to be selling pressure because now that we're in this, we're seeing a little bit of higher volume, but you know, there's a wick from at the bottom, but there's also wicks at the top. So a lot of this could be related to selling pressure now that we're in the level. Because once we get into the level, I'm expected to see higher volume. At least that's what I want to see. Now, SPY is in the fair value gap, but ES is not. And ES is still tapering off. But as you see these candles, the volume's just decreasing as we slowly start to move into it. So I said to myself, okay, I'm interested in this trade, but I'm obviously not going to get in yet. I'm just watching because I want to see ES now get in there. Either I see SPY just give me this, you know, huge, you know, high volume rejection pin bar off the level, and it's one of those, you know, setups where I just can't walk away from, which I'm not getting from SPY. So I have to be patient and wait for ES. I want to wait for ES because as ES moves into that level, that's where I would expect to see that trigger. I want to see as price moves into that level, it's going to start to execute those sell orders, and that's where we're going to start to see the increase in volume. So we're not there yet. So this is where, as a trader, you have to be patient. So I'll kind of go down to the 2-minute, and we'll continue on. Now, again, mind you, we're in the fair value gap on SPY. Okay, but we're not in there yet. Or we just arrived. I'm sorry, at ES. So ES now is wicking off of that level. Okay, and I see a little bit of an increase in volume, and that's what I want to see. I want to see an increase in volume on as we get into that level because I'm expected to see an increase in volume because as you move into that level, if there's selling pressure, that will start to initiate that increase in volume. So I'm going to kick it forward here. Now I start to see that candle, and I have to pay attention more to the volume and wait to see that. Now I'm going to switch to the 15-minute because the 15-minute is where I got the signal. So now I like this candle here, right? I see a huge rejection candle. Now here's what's important. This is the one candle that was really the seller for me. On SPY, let's expand SPY. Okay, we have a rejection candle. It doesn't matter if it's green. It doesn't matter, right? Because, you know, interestingly enough, a lot of traders think that just because they see a green candle, that means green and buying. And that's such a huge misconception. You know, you have to move away from that mindset, right? You have to look at the formation of the candle. You have to understand the anatomy of how the candle is even formed. So look at the candle here, and look at how much volume it created. Okay, that huge move. Let's just say from 567.16 to 567.94. Okay, like a 70 some cent move up. Okay, close to 70 cents. Move up created that much volume. Now, on a move up, if there is still buying pressure, if we see similar volume, this actually is more volume. This candle here that moved into the level has more volume than this candle here. Okay, this candle, this long candle here, this has more volume, slightly, not a lot more. But why is it yellow? Is because in order for the way this VSA indicator works is that once the volume bar reaches this red, then it's considered, high volume, right, on an average, and this is moving up. So this curve is moving up. So this bar reached that level, which made it yellow, but this has just about the same or a little bit slightly more, but it hasn't reached that because it's starting to curve up. So it hasn't reached it. But overall, there's just a little bit more volume on this candle, on this rejection pin bar candle, which is what I want to see. So the point is that on a move up, again, we talk about basic volume spread analysis. If this candle created this much movement to the upside, if there's buying pressure, then we would see a very similar candle. We should see the same candle size breaking right through this level. And look at the candle. The candle, it's a bearish rejection candle. So again, the criteria. What do we see? We see one, the bearish rejection candle, right? Closing out of the bearish fair value gap. That's one. So we want to see the candle, number one. We want to see the volume, number two. Now, yes, it's fair. It's fair that this is, if green is considered low volume. Yes, you're right. But we have to compare it, right? It's all about the comparison of previous candles. So we're comparing it not necessarily to this. When I say the previous candle, it doesn't necessarily mean the just the candle prior. We're talking about previous candles on the move up, right? Because if we're looking for rejection, we care about the candles on the move up. This candle created this much volume. This candle created the same amount of volume or even more, slightly more. We would see the same candle size to the moving up, but we don't. We see this rejection candle, which tells you that sellers are there. So what do we have? The volume, check. We have the candle formation, check. And we have the third thing, which is the volume delta, which is telling you where all the trading activity is in this 15-minute candle. It's right there. What am I referring to? I'm referring to this horizontal line right here. I can remove the red, and I can remove this arrow. So it's this horizontal line here. It's the indicator that's telling you where all the trading activity is. That means that all the activity is above price. On a rejection, we want to see all of the trading activity above price. That means that sellers are pushing price down. It's the same move every single day, right? And that we're looking for the same thing every day. The signals are the same every single day, right? And we look for the same thing every day. We get it, we take the trade. So that's what we saw, and that was the entry there. Okay. We move over to ES, right? Let's look at ES. Let's remove this, right? Let's focus on this candle here. That candle and this candle, okay? And then let's look at the volume. That volume and this volume. Now, yes, there's slightly less volume, right? It's 22,000, 23,000 versus 26,000. And all I'm doing is just looking to the right, and I'll draw a line so we can see, right? There's that, and there's that. So this this previous, this bearish candle wick off the level has about 26,000 or 23,000, I'm sorry. And then this candle right here, the big candle to the upside, has 26,000. So it's comparable, right? It's almost the same. You have to make the logical decision, right? As us as traders, right? We have to make logical decisions. It doesn't have to be the same, but the point is that this candle created this much volume, and then this candle created almost the same amount of volume. Like it's 3,000 shares different. It's comparable, but the point is that we should see a candle with the same size to the upside if there's buying pressure. And if we don't see that and we see a rejection candle off of our level, that is our indication that there's sellers there. Now, do I have the line that we're looking for to show the volume adjusted? No, I don't necessarily need that, right? Because that's just another checkbox to give me, a clear signal, or that's just more confirmation. But I don't need that confirmation. I already got on SPY, right? So then you get that, and it's not a high volume rejection. We don't necessarily need, the red volume, super high, extreme volume rejection, right? We're just comparing it to previous, right? We got our low volume move into the level, okay? Remember, break and retest. We break a level, come back, retest. That's exactly what's happening here, right? It's a break and retest. We broke a level, we're coming back to it, and we expect to see low volume on the retest, and then we look for the rejection, and it's exactly what's happened here. That's the candle that we take. That's the trade that I will take every single day. Now, there was a little bit of drama. Price was bouncing up and down, but that candle was enough for me to get it. I saw, and even on this one here, let me stop. This candle right here, right? This was another candle that I did sit in a little bit of drawdown here, right? Because this is the candle that, we started to break over it, but I was still confident in my trade. I'm going to speak on something else here in just a second here. This candle, it did break above, so I did sit in a little bit of drawdown because I got in here on this candle here. So price moved up a bit. But once I saw this candle break over the level, we didn't mitigate the fair value gap. So I'm not scared to get out of this position yet. I'm not like worried about this trade not working out. And I'm going to explain it something else too. But this candle here had increasing volume, right? Again, not ultra high volume, but if you look at comparison to the previous candles, like this candle, for instance, here, this long candle, it's even higher. This has more volume than the previous one. Okay? And it's just barely outside of this like yellow high volume. Okay? And this is on SPY. ES, same thing. It's the same type of candle, lower volume, but still like on this now I have this signal that all the trading activity is up here. All the trading activity is all up here at the median of the fair value gap. And the fact that we're still breaking over the median, but we're rejecting the median because it's either the entry point of the fair value gap or the median is where I'm looking for the rejection. Now, I said I was going to speak on something else too, right? Let's go to NVIDIA, because NVIDIA is really the other thing I was looking at. So in Apple too, right? So why are we bringing Apple into this, right? Apple, NVIDIA, right? Apple. So I'm looking at Apple too, right? I'm paying attention to it being in a bearish fair value gap. So at 11:30, which is when I saw my rejection candle, right? 11:30. So I had my entry here at the 10:45. 11:30, which is this candle here. Whoops. This candle here. What's going on? That candle there, and this candle here, when price broke over the median of the fair value gap and we saw higher volume rejection, we are coming out of this fair value gap. I'm watching to these high influence tech stocks. We broke out of the fair value gap. Okay, so as I see that, I'm expecting to see more downside. Now, what else am I looking at? I'm looking at NVIDIA too, because NVIDIA What was troubling was the fact that we had these two simple moving averages. We have this red one, which is the 50 daily simple moving average, and we have this blue one, which is the 20 simple moving average. Those cause trouble. Price reacts off of these daily simple moving averages. Okay, you should put those on your chart. I would advise, but I don't advise you taking trades off of them, but use them because they can help you with your trading. Now, I have them on NVIDIA, so we were causing some drama. So my entry was at this 1130 candle. I saw this on NVIDIA. I saw this rejection candle, not on high volume, so okay, fair. But once we broke underneath this with increased volume on this SMA, I said, okay, I like that. I'd like to see that break. Now, the next obstacle was to break under this, because if we go to the lower time frames, you can see that we were kind of bouncing in between these these two SMAs. Okay, we had some drama here. Okay, and once we broke below this with volume, and see how you started to see this volume increase, right? Once we got below this is when things started to get a little saucy, right? That's where I was pretty confident in this trade working out, and I was able to see some big downside. All right, so I'm in my entry on QQQ, not on SPY, on QQQ, and I was waiting. I saw the break below the fair value gap on Apple. I like it. But the next thing was price was kind of bouncing around on SPY. It wasn't moving too much, right? It was moving down, but slow. We were kind of hanging around this area right here. All we needed to do at this point was break this EMA. Look at the time. So 12 o'clock, we were kind of bouncing around this EMA, 11:56, 12 o'clock, and 11:40, 11:56 is where we were kind of hanging out here, right? We were kind of building a base somewhat, and that's at 11:56. And that's because we were hanging at this SMA. Once we broke that with volume, that's when things got really saucy. Let's go ahead and play that. Boom. Boom. There it is. And that's all I was looking for. I was looking for the break of this simple moving average, and then it's actively watching NVIDIA. In fact, when I was in my QQQ short trade, I wasn't even looking at SPY. I wasn't even looking at ES. I was more focused on NVIDIA because I knew that NVIDIA was what was holding the market up, and I was actively watching that. I really wasn't watching Apple anymore because I knew that Apple had already broken out of the fair value gap. So I was more interested in NVIDIA because NVIDIA was what was holding the market up. I wanted to see it to break this daily simple moving average. And once we got that increase in volume, and I was actually watching it on the 1 minute, once I saw that break on the 1 minute, and it was this particular candle right here, when I saw it break there, that's exactly what I wanted to see. And then things just continued to move down. And that's where I was very, very confident. I started to see this high volume. I start to move down to the 1 minute. I see these, extreme volume, right? When you see this extreme volume, that's where, that's where I am paying attention to the candles, but I'm actively staying in my trade because that just tells me that there's just aggressive selling, and I look for the next level to target. I was looking for a previous day low to target, and that was really the trade. Was it a very clear trade? Yes and no. Because when I say clear trade, the reason why I say that is because, well, we did break to a little bit outside of this, right? I did sit in a little bit of drawdown, not much, but I did sit in a little bit of a drawdown. But when you trade the fair value gap, this is one thing that you have to be confident. When you see these higher volume rejections, when you compare it to previous candles, right? That's where you have to be confident in your trade. It doesn't have to be extremely high volume. And I know that as a fair value gap trader, sometimes we miss some of these trades because we see these rejections, but they're not high volume rejections. Because there's times when I say, like, look for high volume rejections, with the rejection candle, the pin bar candle. But this it doesn't necessarily have to be a higher volume. It's high volume relative, and that's what I said in here is that we want to see, number one, decreasing volume into the level. Okay, you don't want to see strength coming into that level. So that's number one. Number two is that we want to see candles with large bodies in low volume relative to those around. So that candle right here, I suppose, is low volume relative to the other ones around. If I compare this to this rejection candle right here, or this rejection candle here, that has to be pretty low volume. It is high volume, but I have to do a comparison of this candle, this long candle, to this. I should see the same candle to the upside. And the fact that I see a rejection candle, price was moved up and sellers pushed price down, that is what I would consider a high volume rejection, because we don't have to necessarily look for a yellow or red volume bar, but it's high volume relative to what we see around it, relative to this candle and this candle. I did sit and draw down. Price did move up, but I wasn't scared out of my position because I knew that we were, one, still in this bearish fair value gap. We wicked above, and once we wicked back down below, it's the move that I see all the time. As a fair value gap trader, I see it I can't say every single day, but every time I take these trades and I see these rejections, it's the same move all the time. And then to add to the trade, in the confidence of the trade, was just simply watching NVIDIA and watch it. It's been causing drama in these simple moving averages all day. So once I saw the break of this last simple moving average, I knew that that trade was done. So, and that was it, guys. So I hope that this video provides some additional insight to another trade setup. If you see some sort of trade setup similar to this, not just the bearish fair value gap, because this is a bearish fair value. This is exactly what you want to see on a bearish fair value gap. You want to see the decreasing volume moving into the bearish fair value gap. You want to see the rejection candle on higher volume, but also, looking and being cognizant of what like NVIDIA is doing. I actively watch NVIDIA. Even though I'm not trading NVIDIA, I'm paying attention to it. And I've said this before, like when NVIDIA moves into like a bearish fair value gap or pulls into a bullish fair value gap, and we see strength off of those levels, the market is likely going to follow. So when we see weakness in SPY, and we see weakness in ES, and we see weakness in NQ, and weakness in QQQ, and there's a level that's holding us up on NVIDIA, and that level breaks, that's going to add additional aggressive selling to the market, and that's what we want to see. And my computer has a time set to shut down at 4 o'clock. Thank you all. Comment on this video. I hope this was helpful, and I'll see you guys soon.